it's hard to tie up since we have not gone to receiver of revenue. But I thought the budget is based on the planning and program based in the budgeting. So that if you are giving a project, you give with the resources that you have. And that is why there was this issue of EGP. And we were arguing that you cannot procure without having resources. So what do you have to say about that? On the issue, finally, Chair, while I agree counties are struggling with pending bills, I know that it's approaching 200 billion. The Constitution is very clear, Article 219. When money is passed, it should be released without undue delay. And you remember the former CS Ukuri Yatani, we had to censure him in the last session for delay your former colleague Ukuri Yatani. So it's a constitutional issue. But on the issue of latest audited accounts, I think as a parliament we should blame ourselves, because it is the National Assembly who does that job. It is not you as the governors or as the Senate. So we should blame ourselves, especially our colleagues in the law house, of the latest audited accounts. Because you have to appreciate one thing, by the way, let me add this. Us in the Senate, Chair, and you are aware, we were pushing for more than 450 billion. It is after the member of ODMSG SIFUNA went and decided that the counties must be given 428 billion, and they were adding 1 billion each, 1 billion after every time. So I think we have a broader. I'm saying
you are making a very good point, but I think you are losing it. No,
I'm saying as a
with
Senate,
that reference to ODM.
I'm saying the member of SIFUNA because he's still the SG unless he resigned. So the point I'm trying to make is that because I heard him saying former party when he was congratulating the MCS or former. So, Chair, what I'm trying to say, let us leave that one, ignore that, Chair, is as a Senate, we have really tried to ensure that there is enough resources for counties. But the question is, even if we allocate, is it viability of getting your whole money in good time to ensure you expend before the end of financial year? I think that's the conversation you should advise your colleagues, especially when you are COG retreat, so that we can have a united force to make a better devolution. So we'll do my 3 questions.
I think you asked specific questions on growth in the county attorney, the governor's office, and the county public service board. I think let's just deal with that, Governor.
Thank you, Chair. Let me ask the county attorney who is here to speak into that. And sorry. How does this step out? Sorry, Chair. I will ask Parsita to take up the governor's office and county public service board.
Yeah, please, because members, we are not doing very well in terms of time. Yeah, please just state your name again and your designation, then.
Thank you, Chairman. Richard Parsita, Director Internal Audit. The question was,
do you need to be reminded of the question?
Yes.
But why are you standing if you don't know the question?
I've had the issue of zero balances and then open and then again growing balances. Because I think when you are checking on the schedule.
Governor?
Chair, we are lost. I'll leave Parsita alone. Joshua and I will take the questions quickly. Yes.
Well, Chair, about the issue of pending bills that have been asked about the governor's office and the public service board. The public service board. Normally, these are not development current bills. It is current bills occasioned by the operation and maintenance that the county runs. And for example, the office of the governor does some of the functions. And because of the shortfall in our revenues and we're not able to pay up the operation and maintenance as has been procured, that occasioned the escalation of penny bills under the current expenditure. So whatever you see there in that schedule is as a result of the operation and maintenance expenditures that have been procured, and the county is not able to pay it in full given the reasons of shortfall in revenues and exchequer releases coming late at the tail end of the financial year. So about the legal, let me give the county attorney to say.
Yeah, please, very precise, direct answers.
Thank you, Chair. My response is very clear. The fee or the amount that was pushed to my office does not belong to, is not a fee note or legal fees. That is a contingent liability that the county government inherited from the defunct local authority.
Those are contingent liabilities?
Yes.
So they should not be trade payables?
They are not, because someone was asking, I think the Honorable Senator for Nandi was asking whether that is a scenario that appeared in Nairobi. We have not had a budget of legal fees that exceed 100 million. So that is a contingent liability belonging to the famous Kilimanjaro case, the hotel that is in Amboseli that became a swamp. And the first county government did accept it as a liability. And that liability should not have borne by the county government. It should have been part of the liabilities that were...
County Attorney,
There is nil in contingent.
there is a schedule that you have attached. And on that schedule, there is a long, long list of fee notes where it is not paginated, but members, if you go through the last schedule before you go to Annex 5, you'll see a long, long list of fee notes, provision of legal services. There is one legal services to Beacon Njoroge and Company Advocates, Kajiado High Court Petition number 2 of 2019. It's clearly indicated as a fee note of 207 million. So you can't have this listed as a fee note and then you deny it and say they are contingent liabilities. Are these actual liabilities that have matured, or these are still matters pending determination?
Chair, and in addition, so that he can answer, but looking at their financial statements, they have not disclosed the contingent liabilities.
Yeah, so let's agree that what we are looking at are these contingent liabilities, or these are mature obligations, because those two are different.
Thank you, Chair. I didn't have this column of the reporting, but what I can tell you is our legal fee budget for the year has never exceeded 100 million every year. So what we have here, we have.
Attorney, I'm sorry, with a lot of respect.
Okay.
What we make of this schedule, because it has been submitted to us, tabled by the governor,
okay,
I believe in good faith, to indicate the situation. And you've got one page, a full page of fee notes. If you add it all up, a quick summation will bring it to probably 300 million.
And I can also agree that fee note could come up to that amount.
Yeah.
But every time we pay a fee note, we don't exactly pay what they ask for. It has to be itemized, and there is a schedule I submitted to finance, so maybe this one will clarify the issue. I submitted pending obligations we have in terms of lawyers who have offered services to the county. I also submitted a list of taxed bills. By the time the lawyer taxes a bill, you have fallen out, the relationship, and the bill has been taxed. But there were, I think, around 60 million.
So what are the outstanding mature obligations from the legal, arising from legal fees?
They could be more than 400.
More than 400?
Yes.
And contingent liabilities? The matters that are still in court?
Contingent liabilities could go to maybe more than 500.
Of course, I think Senator CHERARGEI has indicated that that has not been disclosed in the financial statements. Did we make that disclosure in the financial statements on contingent liabilities?
Chair, looking at the financial statements, they have not disclosed even in page
Yeah.
50 of the original certificate.
Auditor General, was there disclosure on contingent liabilities?
Chair, there's no disclosure.
Okay. Governor?
On the contingent liability, Chair and honorable members, we have one long outstanding dispute between the county government and the company.
No, sorry. Without going to the details, was that disclosure made in the financial statements?
I think it's not captured here.
It is a requirement. It is a requirement that contingent liabilities should be disclosed.
Okay.
The way I asked earlier, how would another governor know that these are the matters that are still pending in court? They can only know if it is disclosed in the financial statement. So that needs to be done. Now, coming back to the question on pending bills, I think the attorney, you confused us by saying that what we are seeing are contingent liabilities, and yet they're listed as fee notes that seem to be mature and that seem to be outstanding for payment. Could you just tell us in totality how much in your 4 billion pending bills relates to legal fees and awards, Governor?
I agree earlier on, Chair, that we normally make a provision for pending bill payments to every financial year for 100 million. And I also concur that what we are seeing there is a list of due payment for legal services provided for. Possibly, I'll not be able to say precisely or with precision the figure itself, but we have a number of unpaid legal services. You know, some are still disputed, some have been agreed upon, and some keep coming. As you know that in Kajiado, we have quite a bit of a tussle with regard to lands and many issues. So the list we are seeing are for legal services not honored. So the cure will be to allocate more money into that vote. Thank you, Chair.
Senator CHERARGEI, so that we move out of this matter.
Yes. Looking at the time, in conclusion, Chair, I think the governor can disclose how much, whether the contingent liability and legal awards. But this is a material non-disclosure in financial statements. Chair, and I've gone to see who signed off this financial statement, a gentleman called Sangaire Tima. I hope he's not related to our own Tima. He's a chief officer of finance and was signed off by, unfortunately, he doesn't have an ISPAC number. I don't know which profession he is, Tima. Your chief officer, is he still with you, Governor? Sangaire Tima?
He's with me. He's not here, but he's the chief officer for finance.
Is he a member of ISPAC?
No.
Okay. Which profession is he, if you don't mind?
He's not a CPK, but he's a finance person.
He's a finance person. Chair, it was also signed off by CPA Joshua Machakusi.
He's here.
Or the gentleman seated next to you, Director of Accounting Services, ISPAC number 12128. You are a chair, maybe so that I yield back the mic. Bwana CPA Joshua, you agree with me that this was material non-disclosure by not disclosing the contingent liabilities through the chair?
Yes, but
No, don't use but.
I'm saying but because you can only disclose contingent liabilities if you have provided details of the disclosure.
Chair,
So from the accounting,
for efficiency of time,
yes,
we are, you know, they say numbers don't lie. Let's just what is there.
yes,
You agree with me, this entity has contingent liabilities?
it has.
Under review.
It has.
You didn't disclose.
We didn't disclose, but we were not.
Not but, I'm using what is there, the evidence.
Okay, it was not disclosed, but we can be able to disclose this financial year.
Chair, no. What I'm asking, Chair, if you allow me, you didn't disclose, which is you have agreed. So you agree as a profession you failed in your duty.
No, I didn't fail my duty. You can only provide disclosure in the financial statement to the extent of the information given by the relevant department, like the county attorney. If I've not been given that there's a county liability that is due or that is going to be placed.
Order. We will not take that direction. even here in Parliament, there's something we say we take judicial notice of events. You cannot give that argument. Note 42 in the financial statement, in the template provided by the Public Sector Accounting Standards Board, Note 42 has even given you the table there for you to disclose contingent assets and contingent liabilities. And there's a table for contingent assets, and below that, contingent liabilities. You went through it and put it at 0. So I think sometimes it's important to own up when you have messed up as a professional. You don't need to defend the indefensible. And just make sure that in the audit that we are going into, those contingent liabilities that have been cited by the county attorney are disclosed. Governor, I hope we are on the same
agree with
page.
you, Chair, and we have actually every time had it in our accounts. We have discussed not once the issue of the contingent liability with that Kilimanjaro law thing in Amboseli. So I am also taken aback about it, and we will make it good by reporting it.
Fine. Members, we need to get out of this matter.
Chair,
And,
maybe
and
with
because
your indulgence,
if we don't manage time, we still have
before I
two other
exit,
meetings.
Chair, I think maybe you woke up very well today on the right side of the bed, because naturally, when a profession commits a professional offense or professional error, the consequences follow. So maybe the CEO should be warned that this material non-disclosure normally attracts some punitive measures from the committee, and I think they should be aware, any profession that accompanies a governor, so that they don't allow the governor to be like Jesus Christ, of carrying all the burdens of people who are not doing their job.
Okay, you just spoke ahead of me because I was going to summarize our resolution on this. There was an earlier indicated non-disclosure of staff payables, which we have agreed that you must provide clarity on the exact amounts owed to staff. That was a material non-disclosure. And the issue of contingent liabilities is also another material non-disclosure. Members, I think we must take a resolution to the House that no county should carry debt older than 2 years. Because under what circumstance would a county owe someone for more than 2 years when every year religiously we pass the division of revenue and every year we pass CARA? Why should counties sit with debt over 2 years? And this is a conversation we must have with the Treasury. And I know that there's been a proposal that maybe pending bills should be paid centrally at the National Treasury. The governors will say we are clawing back on devolution, but they're also not doing devolution a favor because they're receiving the money and not paying service providers. Auditor General, you must also question compliance with Regulation 25(1)(d) of the PFM county government regulations. When we looked at the report of CIA, you did a very good job because you queried the debt to revenue ratio in CIA and referred to that Regulation 25(1)(b) that says the county public debt should never exceed 20% of county total revenues at any one time. You know that exists in law. It exists in regulation. What Kajiado is carrying is more than 50% of its total revenue. As we are saying that the cash disbursement is not a suggestion, the regulation should also not be a suggestion. So auditor, we would expect that you'd be querying the debt to revenue ratio for all the county governments. Because we put it there, we put it at 20%, we are questioning the national debt to revenue ratio, but we are not questioning the county debt to revenue ratio. In fact, I think if we put all that in totality, we'll realize that Kenya is doing very badly. So maybe in this year's audit, Patrick, please tell all your regional directors to report on that particular metric.
Well, get it, Chair.
So we will look at this in greater detail in the coming financial year. Due to limitations of time, we can leave that matter on trade payables and perhaps deal with one other matter on the executive. And maybe just to just to illustrate what I'm saying about debt to revenue ratio, there are also other ratios that have been queried there in your report. Development expenditure threshold, which do not look very good. Your employee costs to total revenue is almost 50%, isn't it, Governor?
About 40.
Because I can see you are spending 4 billion on employees out of a revenue of 8 billion. So that's 50%.
Yeah, it's still not very tidy. It's not 50%, but it requires to be worked out.
What you're putting in development is only 22% of the total expenditure.
Chair, I know development is supposed to be 30%, and we should be able to work that one out.
Okay, we'll look at how those ratios perform in the coming audit. We were asking ourselves whether the county government headquarters complex is complete now.
Chair, that's a very long story.
So, if it is a long story, let's shorten it by looking at the specific
Chair,
issue raised by the
yes
Auditor
or
General.
no answer. If a building is complete, it's complete, Governor.
Sorry, Chair.
If a building is complete, it's complete. It's a question of fact. I mean, it's a yes or no answer.
It is no.
So it's not complete.
We have even terminated the contract. That's what I'm saying. It is a long story.
I think let's deal with it. It's worth dealing with because it's a matter of 492 million. That's quite significant. That 492 million could have settled the debt over 3 years that we have just seen in the other matter. Auditor General, read your finding.
Thank you, Chair. Delayed construction of county government headquarters complex. The county executive awarded a contract for the construction of the county government of Kajiado headquarters complex at a contract sum of Kenya shillings 492,646,852. The contract agreement was signed on 20th June 2024, and the contract was to be implemented within 104 weeks, commencing 15th November 2024 to 15th November 2026. Documents revealed that the contractor was paid Kenya shillings 98,529,370, being an advance amount paid at the rate of 20% of the contract sum. Procurement documents revealed that the project consultant by letter number SDS CGK/06/25 of 17th March 2025 had raised concerns in relation to delayed works. The letter noted that as of 13th February 2025, with 4 months, 16 weeks of the contract period lapsed, only 2% of the total works had been accomplished, signaling delayed works and the need for revision of the work plan. Management explained that the delay in execution of the works by the contractor was occasioned by site challenges which were raised by the contractor, and that the consultant issued instructions to the contractor to proceed with works as the challenges had been resolved. However, project inspection by the audit team in May 2025 revealed that there were no works going on as the contractor had abandoned the project. In addition, the foundation works were not completed, and heaps of metallic materials for binding works and erection of pillars were left lying all over the site. In the circumstances, contract management was not effective and could lead to substantial losses. Thank you, Chair.
Governor?
Thank you, Chair. Chair,
that is page?
This page 29.
29.
Page 29, that's the response. What she was reading is in page 28. Chair, we should respond that the delays in the execution of the works by the contractor was occasioned by site challenges which were raised by the contractor but had not been fully addressed by the consultant, as it involved possible design alteration and change in quantities of work to be done. In response to a letter by the contractor dated 22nd May 2025, the CCM for Roads and Public Works convened a joint meeting between all relevant county departments, the consultant and the contractor. The CCM for Roads also officially appointed a contract implementation working group that was charged to oversee the seamless implementation of the project. The meeting resolved to carry out joint measurements and come up with a solution to the substructure works challenge. Following the conclusion of the exercise by the CCM Roads, a letter was issued on 23rd June 2025 to the consultant informing them of the resolution of the contract implementation working group. The consultant issued instructions to the contractor to proceed with works as the matter had been resolved. The contractor failed to honor instructions to go back to site, which necessitated the management to initiate a termination process since the contractor violated the terms agreed by the parties during contracting. A letter was issued by the Ministry of Roads and a litigation case against the contractor, and therefore a termination letter was issued to the contractor. We have annexures, I think this is 15, showing performance security guarantee that actually was the basis for the payment of the 98 million, and that advance payment guarantee renewal. The Chief Officer for Roads and Public Works instructions to the contractor, a letter appointing contract implementation working group, instruction letter to the substructure works, the information we are raising there. We are showing that the conversation we have had there has all been procedurally done. Unfortunately, we now have terminated that, and the next phase will be to see then how to bring the whole issue to a closure, assess the works done, the money payment, and see how to, if the work done is more than the money that was paid, and because there were also guarantees in the bank, we see to it that we don't lose any money in the process. I wish to submit this, Chairman.
So, Governor, you have paid 20%, but only 2% is done.
That is the question of measurement we referred earlier on there to determine the measurement of really what has been done. But remember, there was this bond, that guarantees that the bank secure the county money that is to be spent.
Chair, in that explanation that the governor has given, it's quite confusing, Governor. Do these consultants and the contractors visit sites prior to bidding for projects? And number two, this language we are using, both of the auditor and yourself, it doesn't paint a picture of what those challenges were.
Yeah, it's very technical.
Yeah. It's just technical language. I mean, does somebody visit a site, a proposed site, before they do a bid? Or you just bid, then you realize that the proposed site is inside Lake, what is that lake in Amboseli? Lake Magadi. And then you have to clear the salt first. I mean, it doesn't make any sense, Governor. What is the process?
Yes, Governor.
Let me ask the head of procurement with us here to in a very summarized way to show that procurement.
Let him just explain, number one, whether the bidders or even the consultants and the county government themselves go to the site before they do the tendering, and number two, what those challenges were in layman's terms, so that your regular Masai.
Thank you, Chair. The requirement for bidding in the bid documents that we instructed all the bidders to visit site, and there was a site visit before the bidders submitted their bids, and they actually visited the site before they submitted their bids.
So what is this arising about site challenges which require alterations?
That is the issue to do with the execution of work, which was being done and dealt by the engineers on site.
What were the challenges? Did you arrive there and find that it's a swamp or what? What were the challenges?
Chair, let me ask the technical officer, Tutui, who is the CEO for Public Works.
Technical issues that arised on site came up in the matter of levels. During the construction of the building, we had different levels that had been designed for, and as we were implementing, we realized that the building will be less than the road level. And due to this, we had to make a decision on whether to raise the entire building by another 2 meters or convert the space into a basement. These had not been taken care of in the original designs, and it is part of technical works or implementation of projects that when certain site challenges occur, there are technical procedures to come in to address them. So these were the challenges. The consultants had designed the building to be lower than the road level. And during our inspection, we realized that and instructed that the building cannot be lower because of groundwater.
Can you also speak to the issue of advance amount paid? Because I know generally a contract like this, certificates, payment would be upon issuance of certificates. Is Treasury here? What's a general procedure? Because I know there's a time when you had this situation of advance payments, and it caused a lot of problems because someone would pocket the 20% and disappear. And if I'm not wrong, there could have been some regulations that then required such works to be paid upon certification. Is there some provision in law around that?
And as I check, Chair, so that you don't lose the trail, who was this person who was doing this design that ends up that the building is lower than the road? Who are doing that design? I mean, it's like from a professional point of view, really. I mean, that is proper professional misconduct.
Yes, proceed.
Thank you, Chair. The building was designed by a consulting firm, Scope Architects, Scope Consultants, and we had an agreement with them. So they were contracted to do the entire design, architectural, structural, and all the MEPs.
And were paid for that great job?
There is a separate agreement for it. We have not 100% paid. They were paid for the preliminary designs. The payment schedules were based on deliverables or milestones. So first milestones were the preliminary designs and the tender documents. The other milestones were pegged on construction of the project. So they
also go to site before they design, or they are sitting in a studio somewhere in...
Yes, they have gone to site, as the director for procurement had said. They attended the site. So as the clients or the technical arm of the clients, we realize that and ask them to we cannot accept a building that is lower than the main road level.
A building lower than the road. I mean, how sure are we that they didn't use ChatGPT to design it?
It's crazy. It's wasted.
It's crazy.
That is true, Chair. That is why the technical team on the client side, that is the county government in public works, when we checked it, we raised questions, and that's what caused the delay. The consultants
So you have all those design challenges, but you're still paying 20% upfront before work has begun, and you have all those design issues. What is the logic?
Chair, the 20%, if you look at the contract and scrutinize it, the 20% was envisaged as an advance payment in the contract. And the county government followed the legal procedures to make the advance payment against an advance payment bank guarantee.
But
so the advance the advance
they delivered only 2%.
That is where I'm going, Senator, if I may.
Address the chair.
Sorry, Chair. So what has happened, I apologize, Chair, for that. Chair, so what happened is that the county government paid an advance payment against advance payment guarantee, which was stipulated in the contract at 20%. This advance payment guarantee is to be recovered with the subsequent certificates. That means in the subsequent certificates that are raised, when any payment is above already the 20%, you start recovering, and by the time you are at 80%, the county government should have recovered the entire advance payment of 20%. So this is a legal document or legal contract that was entered to with the contractor. So the fact that the site only about 2%, as of the time the auditors visited site, is the actual situation on site, and we had not made any interim certificate for the same. So the only payment that was there was the advance payment.
Now that the contract has been terminated, how do you get the money? Because there will be no certificates moving forward. How do we get our money?
Let me ask finance to take it up in procurement.
Can I add, Chair, so that they
Senator CHERARGEI.
Governor, how much was the consultant paid for that work, for that should work? Number two, I've seen in Spentech, Spentech Engineering Limited, he wrote a letter on 22nd May 2025. I think a year or after later,